We have a question, an essay here about variance analysis, and since it's variance analysis, that makes it Part 1, Section C. Maxwell Mechanical is our company, and let's go ahead and read their situation. Maxwell Mechanical Inc. specializes in servicing central air conditioning units. Maxwell Mechanical employs licensed HVAC technicians and apprentices. Each service call requires a combination of both types of labor. Well, if we're talking about variance analysis and we see that there are two types of labor, we're looking at multiple inputs here. Maxwell's standard time and cost for each service call are as follows. HVAC technician, 1 hour at a standard wage of $30 per hour, and the apprentice 3 hours at $14 an hour. During the month of May, Maxwell serviced 1,500 air conditioning units. HVAC technicians worked a total of 1,900 hours with a total labor cost of $60,800. Apprentices worked a total of 4,000 hours with a total labor cost of $52,000. The service calls require a certain amount of direct materials. For the month of May, Maxwell experienced a favorable direct materials price variance of $5,000 and an unfavorable direct materials usage variance of $8,000. So they saved money, the price was lower, but they used more than they were supposed to. Okay, so we'll see how that works in. So that's our information. We have 5 requirements in this question. First, explain how Maxwell could use management by exception. Second, calculate Maxwell's total direct labor rate variance for the month of May and show your calculations. Third, calculate Maxwell's total direct labor efficiency variance for the month of May. Show your calculations. So there we have the total labor rate and the total labor efficiency variances for those 2 classifications of labor that we had. The fourth requirement, without performing any calculations, explain how Maxwell could further analyze the labor efficiency variance. And our key there is without performing any calculations. And fifth, identify one possible cause and one corrective action for the combination of a favorable direct materials price variance and an unfavorable direct materials usage variance experienced by Maxwell in May. So we've got a few theory questions, a couple of calculations. We have to calculate those variances, and so there are going to be some numbers, but the first requirement is not about numbers. It's explain how Maxwell could use management by exception. Well, management by exception means management focuses attention on areas that are not performing or meeting expectations. Management spends less time on areas that are operating effectively. Maxwell can use management by exception. Right there, a nice phrase. It just answers the question. Maxwell can use management by exception by focusing on the unfavorable direct materials usage variance. It could also look at units serviced or total labor costs if they varied significantly from budget or planned results. So with management by exception, we're focusing on the areas that something is going wrong, and so we're looking for those unfavorable variances is what we're going to investigate first when we're using management by exception. So that's our first theory question. Our next 2 requirements are calculations. The first one is to calculate Maxwell's total direct labor rate variance for the month of May and show your calculations. Now, the first thing that we want to do with this is make certain that we understand what it is that we're doing. And so in a situation like this or a question like this, write down your formula. Just go ahead and write down the formula so you know what it is that you're calculating and you can just kind of fill the numbers in. So if we're talking about the direct labor rate variance, the formula is the actual price minus the standard price multiplied by the actual quantity. And so we just need to get this information out of the question. If we look back at what it is that they've told us, they've given us a lot of this information. We know what the standard rate is for each of the labor classes. We know how many hours it was supposed to be. We know how many hours they actually worked. They told us that. But what they didn't tell us was what that actual price was. And so we're going to have to go ahead and calculate the actual price. These numbers in green they gave us. They told us the total amount we paid the HVAC technicians. They told us the total amount we paid the apprentices. And they told us how many hours they each worked. So we know that the actual price was $32 per hour for the HVAC technician and $13 for the apprentice. And then if we go ahead and put the numbers that they've given us into our formula, Okay, these actual prices here, these fill in the last two numbers. We were told that the standard rate for the HVAC technician was $30. We were told that the apprentice's rate was $14. We were told that the actual number of hours was 1,900 for the HVAC technician and 4,000 for the apprentice. And so we just are able to then calculate that we had a $3,800 unfavorable for the HVAC technician and a $4,000 favorable. So when we're calculating the total direct labor rate variance, even when there's more than one input, we're simply calculating that labor rate variance for each input separately and then adding them together. So a $38,000 unfavorable, a $4,000 favorable gives us a $200 favorable total direct labor rate variance. Now, we can see here that we paid the HVAC technicians too much. And we saved money on the apprentices. The overall effect of this was we saved $200. Okay, that's the labor, just because of the labor rate variance. Okay, so that's the second requirement. There's our work. Everything here, all our calculations, that's our work. Now, the third requirement is to calculate the direct labor efficiency variance. Okay, again, so the first thing we can do is we can identify what our formula is: actual quantity minus standard quantity multiplied by the standard price. Okay, and a lot of this information is given to us. We're told what the actual quantity was. We're told what the standard rate, the standard price is for each of them. And so what we're looking at here is how many hours should it have taken? What is the standard quantity? Well, we know we did 1,500 units, and we know it was 1 hour for the technician and 3 hours for the apprentice. So we should have had, based on our actual number of units serviced, we should have had 1,500 hours of HVAC technician and 4,500 hours for the apprentice. Now, that goes into our formulas here as our standard quantity, those two numbers. We already know what the actual quantity was. We already know what the standard price was. And so we calculate for each labor class individually. We have a $12,000 unfavorable efficiency variance for the technicians and a $7,000 favorable for the apprentices. And so we end up with a total direct labor efficiency variance. The total direct labor efficiency variance is going to be $5,000 unfavorable. Okay, the $12,000 and the $7,000 is a $5,000 unfavorable variance for the direct labor efficiency variance. Okay, $5,000 unfavorable, putting those two together. And we can see that we used too many HVAC technician hours. We didn't use enough apprentice hours, and overall that combines to a $5,000 unfavorable variance. So that's really the end of our math. In requirement number 4, without performing any calculations, explain how Maxwell could further analyze the labor efficiency variance. As I said earlier, the key here is without performing any calculations, because this is where we take that labor efficiency variance and we break it into the mix and the yield variances. But they're not asking us to do the math, which is nice. We appreciate that. But we do need to know what it is that we would be doing. So Maxwell has two labor inputs. The labor efficiency variance can be further analyzed by breaking down the variance into the mix variance and the yield variance. The mix variance analyzes the difference between actual and standard input proportions, and the yield variance analyzes the difference between actual and standard inputs used. Okay, the total amount, not just the proportions of it. So we didn't have to do the math. We could if we had to. We remember that. We can do those calculations for the mix and yield variances, but of course we're not unhappy that we don't have to do that. And so this takes us then to the last requirement: identify one possible cause and one corrective action for the combination of a favorable direct materials price variance and an unfavorable direct materials usage variance experienced by Maxwell in May. One possible cause of having a favorable direct materials variance combined with unfavorable direct materials variance would be that Maxwell purchased cheaper, lower quality materials. So the cheaper gave us that favorable price variance, and the lower quality gave us the unfavorable materials usage variance. The cheaper price produced the favorable materials price variance, but these lower quality materials caused increased waste. since the unfavorable usage variance was greater than the favorable direct materials variance, Maxwell should correct purchasing policies to encourage or to ensure quality materials are purchased. And so we're looking here at our purchasing policies. That's our correction, to make certain that we're purchasing a quality that is going to stand up to whatever the rigors and stresses are of the production process. And so, nice variance question here. Started out with a little theory about management by exception, a couple of math questions doing the variance calculations. And again, a lot of the information was given. Write down that formula, know what it is you're trying to fill in. Use all of the information you can out of the question. There was one number we had to calculate for each of those, and we did that. And then a little theory here about the mix and yield variances, and then finally why it is that we had that combination of materials variances. So again, step by step, item by item through the questions. If you're prepared, there's nothing challenging here. It's just a matter of taking the time to write down the answer, to do the math. And as usual, if we're prepared, this is a question we're going to do very well on, which is going to make certain that our passing score is not only a passing score, but also a nice, good, safe passing score.